The future of money is digital currency. These are the words of Bill Gates from 2016, and I happen to strongly agree with your old boy Bill on this one. The future of money is definitely digital in my opinion, but the life of crypto so far has shown us that a lot of critical pieces still need to fall into place before we can arrive at the future of digital currency. I think crypto could even shed another 80% before the next bull market actually rolls around. You need solutions? Well, I got them. So don't worry, your old pal Drew always comes through. In this series, I'm going to unload a heavy dose of information on you, and we're going to explore the history and the modern mechanics of precious metals investing. And if you don't know where to buy it, look in the description. I always have a link for you. And I will do my absolute best to catch you up on everything that I've covered in the past series, but you should absolutely go and watch those to get a comprehensive look at why I am featuring gold and silver on my crypto-focused channel. Just hold on tight and keep your ears open. Now, hopefully this series actually helps you take the right steps to totally sidestep the pain from the looming bear market recession that could be coming to our entire globe. But before I get into this, make sure that you smash that like button, make sure you hit subscribe, boom, bang on that notification bell, comment anything that you want in the relevant sections. I appreciate it. Now, let's get into why I'm so bullish on gold and silver while the world is so bearish. Gold and silver have been valued by investors and traders for literally thousands of years. Savvy hustlers, business owners, and entrepreneurs like myself have actually trusted in holding their wealth in gold and silver because of the natural scarcity of the precious metals themselves for a very long time. There simply is just not much of this stuff comparatively to everything else that we can get, produce, or print. It is almost impossible for even the most advanced labs in the entire world to create gold and silver. And the Federal Reserve certainly can't create it, because you know they would if they could. So where does gold actually come from then? There is actually an entire multi-billion-dollar mining industry dedicated to pulling these metals out of the ground. The top 5 gold producers are all headquartered in North America. Surprise, surprise. US-based Newmont Gold Corp is currently the largest global producer with a market cap of almost $39 billion. Now, the next 4 biggest are all Canadian-based. The largest among these is Barrick Gold, which is $31.3 billion in market cap. The combined market cap of these 4 Canadian producers is a little more than $100 billion. Now, Canada is kicking the proverbial ass in the gold mining game, but just like Bitcoin mining, it is not cheap to mine gold. These companies have to pay for exploration to find and buy new viable land with gold deposits. Then they have to purchase and maintain lots of mining equipment, and not to mention the labor and costs that come along with actually doing the mining. Investment firm Van Eck calculates that the mining industry on average incurs about $1,250 cost per ounce of gold production. They are able to turn a profit though as long as gold stays above that break-even price. So let's be real, most likely will. Now gold reached a peak inflation adjusted price of roughly $2,200 in February of 1980 before declining to a low of just under $400 in April of 2001. In the past 20 years, its price has generally risen, reaching more than $2,000 in October of 2022, reaching more than $2,000 in October of 2020, and as of the recording of this video, the price of gold sits at around just over $1,800 per ounce. So these producers have been in profit for a long time, but that doesn't make it cheap to mine gold or any easier. And in the case of silver, when it is used in industrial applications, in industries like medicine, water purification, and increasingly in batteries, it is gone forever after that. So the high cost and risk to produce, as well as the loss of already produced precious metals, contribute to the high levels of scarcity of these metals. That makes precious metals like gold and silver an excellent store of value demanded all over the world for as long as historians can trace back civilization. For the majority of our history, gold was actually a main currency that was used to trade at any city on earth. Gold was and is still technically exchangeable for any product or service that you could imagine. But while gold is still considered to be fairly liquid in terms of investing, it no longer plays a central role in the global economy. The way that gold and silver are positioned in our modern economy looks much different now. First of all, that are considered precious metals that are held in reserves, and those are held in reserves and used only for industrial application when absolutely necessary. Things such as platinum, palladium, rhodium, ruthenium, iridium, osmium, etc. Secondly, precious metals are now mostly held, and not so much as actually physically traded. Jewelry commands the largest percentage of above ground gold, coming in at an estimated 46%, or about 95,000 tons. The next most comes in at roughly 45,000 tons, or about 22% in the form of bars and coins, including gold-backed securities held by the private sector. Next up in the above ground holdings is the central banks in the US and Europe. And don't worry, I'll break those down for you as well. The US has about 8,100 tons. Germany has about 3,300 for reference. Italy and France hold about 2,400 tons apiece. Russia brings up the rear with about 2,300 tons. But all of these central banks around the world hold about 17% of that supply, which is about 34,000 tons. In all, there's been about 205,000 tons of gold mined since about 1950. In fact, about 2/3 of that has been mined since 1950. Now, in our day of credit availability and being able to borrow money being the sexiest thing ever, gold still has its hardcore holders, just like the crypto community does. The reason why people still cling to these assets is because gold and silver are the #1 asset known to mankind, pretty much from inception, that people have held and actually stored value in. But just because the price of gold is seemingly stable right now, or relatively so, that doesn't mean that it can't be volatile in the future. I dropped a few breadcrumbs in this video, and I will obviously expound upon it more in the series, and there's 3 more videos to go, so make sure that you show up for those. And if you like content like this, make sure that you smash that like button, make sure you hit subscribe, boom, bang on that notification bell. Comment anything that you want in the relevant sections. I appreciate it. Thank you so much for showing up to this video. I will see you in the next one. Have a good day, everyone.